Hello there, my friends. Chris Marcus here with you on Monday, September 18th. And today we have a quick video explaining why the markets seemingly always go up, even if often it doesn't seem like they should be going up. And certainly, if you've been watching this channel for a while, we talk a lot about how these aren't exactly your granddaddy's freely trading markets where things are bid and offered based on natural supply and demand. And in today's exhibit of just how distorted things have come, there was a story that I've heard a couple times over the past couple of months, although someone was mentioning it again. And anyway, I thought it'd be worthwhile to pass along. So if you're feeling a little confused of why, you hear a lot of people saying things aren't ideal, yet you see the market continue to go up. Well, here you go. And basically, the Swiss National Bank, so for Switzerland, imagine their version of the Federal Reserve, has reportedly been buying U.S. stocks, which is kind of bizarre on the face of it. I mean, why would the Swiss National Bank be buying U.S. stocks? These are the kind of things that traditionally didn't happen. I would continue to say that 20 years ago, if you had told someone that central banks were going to be buying stocks in general, let alone buying all the bonds with the negative interest rates, people probably would have looked at you like you were crazy. A lot of stuff happening today that is being presented as normal or the way, yet is really so divergent from what I think almost anyone would imagine the financial markets are supposed to be. And think about this. According to this article that looks like it came from John Malden, good analyst, and is on Business Insider. We'll link to that one below. Swiss National Bank owns about $80 billion in U.S. stocks and a guesstimated $20 billion or so in European stocks, and continues on here to say that the Swiss National Bank has bought roughly $17 billion worth of U.S. stocks so far this year. They have no formula. They're just trying to manage their currency. Again, going back to this idea that central banks have propagated in the public, saying whoever's currency is the weakest is going to make their economy great. That's generally about as silly as it sounds, and if that were actually the case, then why not just print money endlessly, which I guess they're kind of doing already. But you can always take these things to the extreme. If printing money is good for an economy, why not just let the spigots fly? Of course it's silly. Doing a little bit of it's silly. Unfortunately, a lot of these central banks are doing a lot of it now. And again, take a guess how the Swiss National Bank has the money to buy these stocks. Well, like most of the things that central banks do, they just print it. So essentially, you could have anything happen to the U.S. economy. Good, bad, doesn't matter. And if central banks have the ability to print money, and this isn't just the Swiss central bank, I hear the Japanese central bank is buying stocks. I don't know if they're buying American stocks yet. Again, keep in mind, I was talking with my friend, another gold and silver analyst, Dave Kranzler, this morning, and one of the things we were agreeing on is that things are so different from your traditional economic environment where it used to be you look at the numbers, you see how all these things factor together, and then make decisions on what seems like a good move. The only problem is that so many of the numbers that we receive, whether it's from banks or governments, again, not to just sound like I'm trying to be skeptical or give people a hard time, but having spent years reaching into how some of these things are calculated, how they're often not really being completely forthright. For example, there's the amount of gold that China lists on its balance sheet that it owns, although somehow that number hasn't seemed to change in the last couple of years when all other signs point to them being on a massive buying spree. So again, it's such a unique financial environment where it's almost look at things more qualitatively than quantitatively and try and assemble how they all fit together. Again, so who knows how much the Swiss or the Japanese are actually buying? It could be the amount they list on their balance sheet. It could be a number much larger than that. Could be smaller than that. I usually don't find those to be the case. Yet in the bigger picture here, again, think of how a market, let's say there's news that indicates the market should be trading lower. Well, whether it's the Swiss, the Japanese, or you may have heard of the Federal Reserve, well, I guess no, this isn't a Federal Reserve, but the Plunge protection team, which is a wing of the U.S. that basically, if the market's going lower, they can say, well, we're just going to buy these, make it higher. Is it worth more? Maybe not, but we can print money and make the value of it, at least the numerical number that it's trading at, higher. So again, this is why you don't really see often much correlation to what's actually happening and the price movement in the market. Again, it's bizarre that now, and sometimes you just wonder what deals have been made amongst these governments that they don't tell the people about. One thing my friend Dave was mentioning is we were trying to figure out with all the gold and silver China's buying and the fact that you would almost have to think they're aware of what's going on, why not just force that break point in the market by keep taking metal until you get a failure to deliver. Dave was mentioning that there have always been rumors that there's some implicit deal between the U.S. and China. Now, this is speculation, but you do see these things happen. We find out, we read after these guys come out of office a couple decades later and they write their book, you see the deals that are made and how our political system works. So who knows what's really going on between these central banks? But I thought this was relevant to point out because I get it that people are confused. They hear me and other folks saying things aren't that great. There's a lot of manipulation, yet see the market going higher. And hopefully this points out how when you give these groups the ability to print endless amounts of money, of which they can then go and put to play in the financial markets, we're getting away, again here, the market could go to whatever level they want, depending on how much money they want to print, based on nothing about the fundamentals of the market or the true value of it, but just based upon how much bankers and politicians decide is the amount that they want to print that day. How does this all resolve? Well, I continue to see this as the greatest the set of bubbles in financial history. That's why I continue to like going in gold and silver, because at some point, I don't see, again, I try not to go into absolutes, but studying this for a decade now, I keep trying to think, is there something I'm missing? Is there some other outcome of how this ultimately can be resolved? I haven't found it yet, and I continue to see it as similar to how if you were studying what was happening in mortgages 10, 12, 15 years ago, you saw what was happening. When these things get resolved, always the tricky question, yet perhaps the main point is just to point out that things are a lot different than what you hear if you turn on CNBC or read the Wall Street Journal. It's tricky when you have these bubble environments. You don't know how long it goes on for, yet at least just being aware of the actual situation and the dynamics that are at play. Maybe if you were thinking about going out and buying and flipping houses, maybe is or isn't the time to do that. Again, everyone's everyone's situation is different, so it's going to play out differently, but I just keep going back to how people felt so blindsided and as if what happened 2007, 2008 came out of left field and they were unprepared. I'd like to change that so at least you understand what's happening, can think about your own situation and what's a way to factor in what's coming, what all the signs point to has to resolve at some point, and then make the best decisions for yourself. So, with that said, we're going to wrap up today, but I thought you might like to know how ridiculous this thing is and how the markets are actually working these days. And leave any comments you have below. Hit the subscribe button, and we'll keep you covered on the markets, and see you again tomorrow. Thanks.